It's a great time to have you back on the show. Although gold and silver are getting hit here on Friday, it's been a great run here the last month or so, and even this week. Ever since Shanghai has opened, it seems there's been a shift in the sentiment and the way the metals have traded. It seems to me, anyways, quite an exciting last few trading sessions in last week.
Well, I agree with you, and I think it really caught the attention of the chaps on the other side. Because, as you know, I mean, the open interest is at sort of elevated levels for both gold and silver in the COMEX. And yesterday, when it was actually a spectacular day earlier in the day when silver traded up to like 1770, and then it was that violent attack that knocked silver and gold down dramatically. And it was just the volumes that was sold in a short period of time. I saw one number that suggested they sold in about 2 minutes' time, 18 days of silver mine production. And not surprising, it knocked the silver price down the better part of 90 cents. But it keeps coming back, and I think their problem is getting more difficult. I think we're in the final stages of the suppression. And when silver gets away on the upside, I think people are going to be amazed at how far it goes.
It almost looks like today, and for periods throughout this week as well, that gold is being leaned on in an effort to control silver, because silver, being a tighter market, having received the brunt of even the most aggressive suppression over the years, and forward mine supply being in a precarious position, was miners basically not able to operate on a profit. Silver started taking off and getting away from the cartel. Yesterday's move is part of that, and today, we're even today as we record, it's just past 2 p.m. Eastern, and all throughout the London session in the morning, silver was actually in an uptrend even after yesterday's mauling, and gold was kind of going sideways, then drifting down, and all of a sudden starting getting a lot more pressure. And it really looks like the powers that be are attempting to try to keep a lid on gold because silver was getting away from them. I was wondering if you'd share that opinion, and what's your take as far as what's going on this week.
That's an excellent observation. One of the guys who I know quite well, and I think has a really good handle on this whole situation, refers to silver as the cartel's kryptonite. That's going to be the one that destroys them, because there isn't a lot of inventory above ground. And I mean, I think demand is solid both for investment purposes and industrial purposes. And so consequently, they have to be running out of physical silver. So that is the one that I think 48 hours, they've really knocked it around. But silver, remarkably, I mean, it came down from its high of yesterday, but it's still, around $17. Quite frankly, this is unusual. For the last 5 years, it was silver they used to kick around, and gold was the ancillary. Now it's changed. Silver appears to be taking the lead.
Yeah, it is fascinating to see how silver right now is definitely leading the trends, and it certainly does appear that they're pushing gold down to try to contain silver, and I wrote about that, and I'll put a link to the write-up in our article for the write-up for the show, so people can take a look at it, because a lot of people listen to just our podcast. But hey, there definitely seems to be pressure putting on silver to contain gold.
Well, the thing that goes unremarked in the big picture scene, as of May the 1st, this will be 5 years since they sort of took silver to the outhouse. And I mean, in that 5-year period, the amount of debt and credit creation and, money printing that's gone on has been staggering. I don't know that I think I'm correct when I say I don't think silver has ever been cheaper in relation to the amount of money that's out there globally. And so consequently, I mean, that's why they're trying so hard to suppress it, because if this thing gets away, I mean, their whole scam is going to be revealed. So as I say to many people, we are in the end game. What we got to debate is the end game going to take weeks or months? I don't know, but it won't take more than that.
So you believe that the value pricing moving higher to support, miners and so forth, is definitely something that's a 2016 kind of scenario. Right?
I believe it is, and I think the remarkable price action in the silver stocks in the last while, and I mean, I'm a great fan of First Majestic, for example, and what have you. And I mean, these stocks have been just like bull pups. They just keep thundering forward, irrespective of what's going on day to day in the on the COMEX with the silver price. I mean, the silver price has been better, but the stocks have been explosive.
It almost reminds me of the 2003 period where we had another major move, and the precious metals bull market was still in its early stages back then, but it was coming off of that nadir that set in the turn of the century.
Oh, I remember it well.
Yeah. And you were managing a fund at that time. And
I was. And I mean, one thing about, it's funny, like I've said to a lot of people, I think about 5 separate occasions in a reasonably short number of years, my fund was up over 100 or 150% in a short period of time. But I'm not sure I've seen a more explosive move since January the 19th, when the Huey index bottomed at just under 100 and was up as high as 210 in like 3 months. That's explosive action, and I think it's foretelling the future.
And do you think that there's a lot of new monies coming in, or if this is more representative of people who've known the story and are just adding to their positions after an assumption?
Well, I have a number of, that's a good question. I have a number of theories on this. I would dare say that the average person still doesn't have a clue what's going on. And not to denigrate any of my friends, but I get together with some guys I've known forever. And I mean, they're very smart guys, and they're in the market. But when I start talking about silver, it's like as if I'm talking about something in another planet. They're not interested. So I don't think it's that. I honestly think that maybe the people that have been conducting the suppression scheme realize that it has a very short lifespan, and there may be some buying coming from that quarter, because it's been relentless buying, and it doesn't correct much. So I don't know. It's going to be interesting to see in retrospect what the real force behind the stocks was early.
On a related note, with your perch at Sprott, a lot of institutional folks come to Sprott to, get your analytics and get your sense as to where the whole industry is moving. Has there been an increase in interest from the institutional sector knocking on the door of Sprott?
Yeah, there has been. That's a good question. I mean, clearly, I think one of the catalysts in the short term was our successful issue there. And I keep asking my associates, have we got the silver yet? And when I last spoke to them, no, we have not got the silver. I mean, it's been contracted, but we have not physically taken delivery. And that's been what a deal is now over a week old.
If you could speak to possibility, do you believe that Sprott would be accumulating further in PSLV at some point in the future? I mean, I know you're capable of that given the deal and the way it's structured.
Without question. I mean, basically, it's a wonderful way for the public institutions, the public to own silver, because in this instance, we can guarantee them with audits and what have you that the silver is all there. I mean, as you well know, there's so many paper silver products that are just paper, and their prices are being replicated with derivatives and all sorts of stuff. But when the push comes to shove and you really need your silver, it isn't going to be there. So, not to be sort of talking your own book, but our product's legit. And I think we'll be, obviously, as the price and the whole sentiment in the sector changes, we'll be doing more issues for sure.
Here's a related question to what I just asked you a moment ago about folks knocking on the door of Sprott. Do you also see people who, institutional investors who clearly understand that there is kind of a fog hanging over other ETFs and the question of allocated storage, even if they have an investment bank relationship where a major bank may be on paper claiming that they're storing their physical, but it is not a hypothetical situation in the sense that even I think it was Morgan Stanley that it got busted a number of years back.
They were charging fees for a non-existent silver.
Exactly.
It's pathetic. So I mean,
do you think that institutional guys know this? I mean, how aware are they that they definitely have a fiduciary responsibility to be seriously skeptical about what's going on?
I think they're way behind the curve, actually. And I think some of the smarter guys opinions I respect are, they're really outspoken on the subject that you must own your gold and silver outside of the banking system. And I don't know that that's gotten through to that many people yet, but it will as time goes on. And that's going to make an enormous difference, I think, in the silver market. Like, I call it a Ponzi scheme. I mean, all of this gold and silver that's being sold in the COMEX and the LBMA, paper silver and gold, I mean, there's no gold and there's no silver. So consequently, that is a classic Ponzi scheme. And at some point, this is going to bring it down. And I think that, for what it's worth, I think the opening of the Shanghai Exchange that you alluded to earlier this week certainly was a positive development. And that really got the paper guys upset, and that's why they've acted up so violently in the last day and a half.
It's certainly been a different feel this week during the overnight trading and London session than we've seen really over the past 4 or 5 years.
Well, it's odd. That's a good point you bring up, because, I mean, the suppression often took place at 3 in the morning when the London traders arrived, and then it sort of went into overdrive and COMEX and what have you. But lately, the pressure's been coming in Asia, which is unusual. And then London, and London in particular, there's been a better bid for this stuff. So, yeah, I think things are changing, but nothing changes overnight. But I think we're going in the right direction.
Let's switch gears and turn back to the miners. And I'd love to get your perspective on where silver producers are, and gold as well, but silver in particular, because of the fact that the vast majority of the industry is not able to produce profitably. What's your sense as far as how much damage has been done to the forward supply picture, and where we are as far as miners are concerned?
Well, that's a great question, because as you know, a significant proportion of silver coming out of the ground is a byproduct of base metal production. And I believe, in my view in the economy, which is not optimistic, that I think that you will see, because the system's overbuilt, I think you will see significant drops going forward in demands for base metals. And that will affect the supply of silver, because they'll have to shut some mines down coming out of as a byproduct. At the same time, the pure silver mines, if you fully cost them, you take the capital cost, the exploration expenses, the overhead expenses, and then the everyday variable expenses, they're not making money at these prices. And I mean, the fact is that this can only go on so long. There's no question that in the next 2 or 3 years, irrespective of what the silver price does, production is going to fall. And this is going to coincide with a significant rise in demand, and the only outcome to that ultimately will be physical demand will take over the pricing mechanism, and the price is going to go nuts.
Yeah, and a lot of people are very worried about a worldwide economic downturn taking a big beating to industrial demand, but the amount of increase in investment demand for silver could in fact end up scaring industrial producers, and even if we lose 100 million ounce demand from industrial producers just because of macroeconomics, which is a pretty significant percentage decline, I still think that even industrial demand would probably not be a negative because of simply the desire of manufacturers to make sure that they have supply in a competition with investors.
That's a very good point. And one thing I like about silver, it's such a versatile metal. And I mean, various usages are growing, and some like medical uses and solar panels and all this stuff. I mean, I don't think, even if in an significant economic downturn, which I actually think is coming, I don't think that industrial demand for silver is going to be the driving force. It may go down some, but it will be dramatically overshadowed by the increased investment demand. As you guys know better than I do, I mean, silver is the poor man's gold. And I mean, basically, I believe implicitly in this idea that the gold-silver ratio is going to collapse in the coming bull market in precious metals. So as much as I might like gold, silver's going to outperform it dramatically.
Yeah, and it already has been. In fact, as we speak,
It's finally starting.
Yeah, Zero Hedge published an article this morning talking about how the gold-silver ratio might, in fact, be signaling. Earlier, about a month ago, we peaked out in mid-80s range, and we've fallen into the low 70s. And yep. Zero Hedge's article is speaking about, hey, maybe there are inflation expectations beginning to percolate through the global financial markets. That's
a good point too. Like, I mean, if you I'm sort of irritated by all this verbiage coming out of central banks and that there's no inflation. They got to get the inflation up. They've created so much money and credit. There's inflation everywhere, but it's in financial assets and in real estate because the economy's sufficiently weak. You can't get the pass through on prices on a lot of stuff. But inflation's coming at us like just a huge wave. And that will be extraordinarily bullish, I think, for gold and silver.
Yeah, and even though a considerable amount of credit is still sequestered on the Fed's balance sheet, and almost all of the inflation, other than in places like healthcare, things that can't be exported or what have you, the vast majority of inflation has been in financial assets, but that is not going to stay that way.
Well, it's interesting. I mean, like, I could talk for hours about sort of the plunge protection team's actions in the stock market in the United States. Like, I mean, the stock market, they literally can't allow it to go down. And every time it shows the slightest signs of weakness, suddenly a miracle bid appears and it gets pushed back up again. And it's the antithesis of what's been happening in gold and silver. This is going to change, and when it changes, I believe it'll change violently.
So, John, Doc, no, we have two Johns on the line. I need to introduce Doc.
He can be Doc, I'll be John.
Hey, Doc, what's going on as far as business this week in terms of bullion sales? Last week there was a huge burst when the Fed was being brought to the carpet in the Oval Office and they were having their private meetings. Is there interesting stuff going on as far as physical demand from silver bullion?
That's definitely continued throughout this whole week, particularly as gold and silver earlier in the week were powering higher, and through yesterday when silver was knocking on the doorstep of 18. A lot of the authorized purchasers sold out of gold coins this week, Eagles, Buffs, Maples, and now we're not talking that the mint sold out, so they can't get any more, but the coins they had purchased in their vaults, they sold through, and it's going to be 3 or 4 days sometime next week before they have more coins. Just showing you the level of demand. I mean, if you look at Gold Eagle sales, the mint sold, I mean, we're still only 3 weeks into April, and the mints sold 87,000 ounces of Gold Eagles, which is closing in on January's number of 124,000, which really is 2 months' numbers, because that's all of December and January's orders, is all the dealers start selling them, pre-selling them for the 6 weeks by the time they finally start minting coins mid-January. So, I mean, you're looking at the potential here with another week and a couple of days of sales that April could surpass January as the highest selling month of the year to date for gold coins of the U.S. Mint. And I mean, that was a really big change. I mean, you're looking at, it's already just about tripled from March's sales. So I'm seeing the same thing with Silver Eagles, already 3 million coins sold. Again, Silver Eagles are still on allocation, and again, I don't see that changing or ending anytime soon.
And that's 1 million coins per week, right?
That's just about roughly the numbers that they put out. If they have a little bit of issue with production and presses down for a day or two, it'll be 800,000 coins. Sometimes they'll do a few thousand coins more than 1 million, but it's roughly 1 million coins a week when there's no holidays or anything. So I'd look for, with one more Monday in the month, I'd look for 4 million coins again here in April. And I mean, you're looking at spike in May just due to the fact that we got 5 Mondays in May. So I foresee 5 million coins being sold in May. And I mean, we're on pace right now for 55 to 57 million Silver Eagles this year. And again, that's not all of the investment demand. If you extrapolate the numbers we see at SD Bullion across the industry, I mean, Silver Eagles are maybe a third of total silver demand. So it's just massive amounts of silver that physical silver that are being purchased from the investing public. And I mean, this week we're officially now in bull market territory for silver. So, I mean, it's certainly likely that the momentum is only going to build as everyone talks about those numbers, sees those numbers, and silver moves higher here. And I mean, if silver takes out $20 to the upside with a little bit of momentum, you could start to see an exciting squeeze or move.
I couldn't agree more. And what you just said is all true. And this is with 98% of the public blithely unaware that anything's going on in this space. So, I mean, only that can only change to the benefit of silver as more people start to realize that, oops, I need some protection against the inevitable debasement of all paper currency. And it's amazing that most of the public has no idea what's unfolding here. But they will learn, and when it happens, I mean, I think it will fuel the biggest bull market in gold and silver ever. So we shall see.
Yeah, it'll get to a point where we'll be in triple digits in silver, and Mark Dice won't be able to go walking around San Diego offering candy bars or 10-ounce bars, and he'll quickly lose his silver.
Oh yeah, can you imagine? Honestly, it's you're always a little reluctant to sort of hang big numbers out there. I noticed for whatever reason James Rickards was talking about $10,000 to $50,000 gold.
Right.
Well, that may or may not eventuate, but the fact is 99% of people when they hear that just sort of go click. They don't want to hear that. But on the subject of silver, I mean, if gold were to go to 5,000, I mean, silver is an easy $100 bill, if not considerably higher than that in that environment. Right. And people should understand that. I mean, as far as I'm concerned, I try to get this across to everybody. You can't own enough silver at this moment. This is the cheapest asset on the entire planet.
Do you think that the average retail investor in Canada has a slightly better understanding of both the role of precious metals and just, what's going on macroeconomically?
No, I honestly don't think so. I honestly think Americans have more affinity for silver than Canadians do. Wow. We may be more gold oriented, but the fact is our own government and our central bank has sold every single last ounce of our gold. I mean, it's an embarrassment. I mean, I'm almost ashamed to be a Canadian when I heard that.
Yeah.
But no, I mean, it's what is hard to get across to people. This is early stages. This is just the beginning of the move, and I think it's been most reflected in the very short term in the stocks. You don't see a move of over 100% in an index very often in less than 3 months.
Yeah, and it does look like that is a combination of smart money and also people looking for something that's got a higher bit of leverage because they know that we are in a new bull market phase.
Oh, yeah. I mean, the stocks are the leverage. Like, I mean, I always just was a stock jockey, and I mean, basically, the stocks always used to lead the bullion. And I think we may be back to that.
And what's also interesting, too, is it seems like even the sequence of the type of stocks that took off suggests that the more blue chip of the core gold companies moved very strongly early on in the fall of last year. Yeah. I mean, we went up and down, and it was kind of a roller coaster, but it looked like that whole rebooting of the precious metals bull market actually began in the fall, and we saw the first moves in the best of the best when it comes to the stocks. And I was wondering if you agree with that and think that there's something to the sequence of which, the large caps moving first, then, the royalty companies, and then juniors are now taking off because people really believe, or at least the smart money believes, that this bull market is on.
There's no question that, I mean, they always buy the allegedly safe stocks, I mean, the big caps, the ones that are liquid and what have you, first. But when this bull market starts to sort of roll, then they sort of start looking for the leverage, and the leverage is always in the small stocks because they're infinitely cheaper than the large stocks.
Yeah.
And what I've been fascinated by is the strength in the silver stocks in this move. Like they've driven the bus more than the gold stocks have. So I think that's basically indicative of somebody's figured out that the real leverage in silver. You're seeing it in the action in the silver stocks.
Yeah, and even in indexes like GDXJ versus GDX, juniors versus the more mainstream, more larger cap, the juniors are now leading.
Well, I mean, I've always been a big proponent of juniors because that's where you're going to get your home run balls. I mean, you can be fine. You can own Agnico Eagle and Goldcorp and all these things, and they'll do fine. But you're going to get 10 baggers where you're going to get 3 baggers in those other ones. 10 baggers in the juniors, as you know, my partner Eric Sprott, I mean, he makes me look like a shrinking violet on the upside of these companies. He's talking 20 to 40 baggers. I'll settle for 10 at this point.
Any other thoughts, John? Do we want to discuss more about Shanghai? I know we touched on it a little bit.
Well, no, I think Shanghai is a significant development because I honestly believe that, we're going to get a physical gold settlement now. And if somebody starts to try to arb this in the future, and the paper guys have got no gold behind their paper, I think it could have a significant impact. It's not going to be overnight, but it's just going to be with the passage of time. I think the pricing mechanism will shift to the east. And that will be nothing but bullish for people who are long the precious metals.
Yeah, and what's really going to be fascinating is when China eventually has a freely convertible yuan, and their capital markets are far more open, and that's going to take time because they're right now they get kicked around by international speculative flows, and there's the currency war backdrop as well too, and all of how that fits into the picture. But 2-3 years from now, holy cow, their whole plan of trying to basically, in combination with Russia as well, of basically dominating the gold trade on a global basis, because most of the gold in fact does flow through to the east and predominantly to China, is very clear to see. It's going to be a completely different world once their currency is freely converted and their capital markets are more open, and they end up being the loci of international gold trade. It's where they're going. It's what they clearly want to do to also bring confidence to their financial system and their currency. And it's fascinating to watch how this is all unfolding. And it's another example, too, of the West largely being completely asleep. Even the policymakers, some of them that do understand what's going on are largely quiet about it. And the vast majority of the people in the establishment are kind of just as ignorant as the people that are not taking Mark Dice's $10 bar, 10-ounce bar of silver versus Hershey's bars,
Well, that's really well said. Like, I don't think people realize what this implies for the West. Like, I had the great good fortune of growing up in the West in a golden era. If you were sort of growing up in the wake of the Second World War, it was your oyster. The rest of the world was in various stages of disarray, and North America reigned. Well, that's changing, and I think it's going to change more violently as it becomes apparent that all the gold is moved and silver has moved to the east, and they're going to back their currency at some point. And I think the Chinese are dramatically understating how much gold they have. And it's going to affect the U.S. dollar in a very negative way and living standards in America. It makes me very uncomfortable, actually, but it's unfortunately undeniable.
Yeah, and it also brings a whole political diminishment of freedoms and a weakening of our Western culture and society that comes with our decline of power. And it's really sad to see this happen, because to a very large extent it's happening because of bad ideas and policy.
Well, it was just we were arrogant. We did really stupid things, and we're going to pay for that.
Entropy of empires.
Absolutely. One thing, human nature never changes. It just repeats itself in different fashions.
Well, on that happy note, at least we can, look to making our own personal financial positions a little bit more buffered from the crazy chaos of our world, and we definitely
I think
appreciate
it's important. I think people that own gold and silver and the shares, relative to people who don't own sort of conventional assets, the people that have the gold and silver and the shares are going to be the ones that make a lot of money. It's going to be great wealth transfer, and I can't emphasize enough how important it is for people to realize that.
Yeah.
And John, I wanted to ask you one final question here before we wrap the show. It's been an impressive quarter for both gold and silver. Really, we're working on 4 months here to start 2016. And obviously, everyone listening, you, me, Eric, we all wish we'd bought more at 1380 silver, at 1070 gold. But is your view, if for those who have been, maybe they already own gold and silver, maybe they don't own any yet, and they've been thinking about it and always wanted to hear adhere to the rule that you buy low and sell high. How much do you think investors are chasing the market here? Well, we're still in the early stages of what we believe, the early stages of the new bull market. I mean, it's always good advice to buy the dip, but it's hard when you see your emotions are telling you the train's leaving the station.
Put it this way, if you don't have any, I think I wouldn't be worrying about the dip. You better get some. If you've got a good position, I think at this point, it's moved a bit, and these guys are really trying to push it down in the paper markets. You might get a better buying opportunity in the very short term. But what we're talking about is risk reward. I mean, the risk is minimal, 10% maybe, if that. The upside's hundreds, if not thousands of percent. So, I mean, I wouldn't be too price sensitive in that way. I would be buying, and if you basically wanted to, dollar average in over 3 or 4 months, that might be okay. But you've got to have it if you don't have any.
The thing I like about the dollar cost averaging, too, is it really helps you psychologically or emotionally because
Absolutely.
If you buy, say I have $50,000 to invest right now. If I put it all in and now silver drops 50 cents next week, I'm kicking myself, I should have waited. But if I put a quarter of it in, silver drops, that original investment's down a little bit, but now, I get put that next chunk in at a discount. So it helps you quite a bit emotionally, as well as then if...
I've always been a proponent of that in a market that's as manipulated as this, because you cannot call the short-term pricing. I mean, yesterday morning when it was trading 1770, I didn't think it was going to be 1690 today. But that's just the nature of this market. I mean, it's rigged, but it's going to explode sometime, and you got to own it.
Yeah, and when we go into contract expiration next week, who the heck knows what's going to happen? The same kind of thing. Maybe the cartel will lose their grip and they'll have to back off and and move to above 17. But clearly, right now, what's going on yesterday as well as today was that they're trying to get it under 17.
No, it was business as usual for the last 30 or 24 plus hours.
Yeah. On Tuesday, we have the May 2006 options going off the board, and the next day we have E-mini silver futures and a couple of other futures as well expiring. So that $17 threshold is probably what is going on. At least that's what I was arguing.
They are definitely trying to hold $17. I mean, these guys work on specific price points fanatically.
Yeah,
but they'll lose, and when they do lose, it will be spectacular. So, I mean, that's why I emphasize that you can't be real price sensitive. If you pay 17 and it goes to 15, then it goes to 50. What difference does it make?
Yeah. Well, we'll put a link into the article I wrote yesterday with all the contract dates, and
that's
so
important.
Anyone who's listening to just the audio, if you go to the Silver Doctors right up for the show, you'll see the listing of the dates.
Fantastic. You guys are doing a great job. I mean, it's very important that the public hear this message.
John, it's always great to have you back on the show. Thanks for joining us.
Well, it's always my pleasure. Take care, guys.
All right, we'll keep an eye on the markets next week with a lot going on. So for the Doc, Eric Dubin, and Sprott's John Embry, thanks for tuning in to this week's SD Weekly Metals and Markets.